Welcome back. Well, as the Federal Reserve continues to increase rates and inflation soars to new highs, there's no question it's affecting U.S. companies. Joining us now to discuss this is Yahoo Finance's Alexandra Semenova, although it's not necessarily how you would expect it to be affected, Alex.
Yeah, well, the Federal Reserve's easy money policies have sent corporate America into a refi frenzy, and balance sheets are looking much better because of it. Over the past 2 years, U.S. companies have taken advantage of near zero interest rates and all-time low bond yields that made money essentially free to borrow during the pandemic. They used these COVID-era financial conditions to refinance their debt, just as borrowing costs are set to increase with higher interest rates. According to new data from S&P Global Market Intelligence, the median interest coverage ratio for U.S. companies stood at 8.1 at the end of 2021. That's even better than the pre-pandemic level of 6.1. The figure is a measure of a company's ability to repay its debts, calculated by dividing earnings before interest and taxes by the cost of its debt interest payments. A ratio of 2 is generally the minimum acceptable amount for a company, and analysts typically prefer a coverage ratio of 3 or higher. Companies have been using healthy market conditions to lock in good rates, and now their balance sheets are looking much better because of it, as the cost of debt is set to increase.
Really, it's, this, I think, goes lost on a lot of investors where rates go up and impacts their bottom line really in a material way. But you flagged Adam Aron over at AMC. What's up with that?
Well, that's definitely an interesting company to watch. As you guys remember, in the beginning of the year, he said that one of AMC's New Year's resolutions was to refinance some of the very expensive debt that it has. So it'll be curious to see where they stand on that as borrowing costs, increase. Because one thing to consider is that not only is it going to be more expensive to borrow new capital, but they have to look at the debt that is coming due, which is going to get a lot pricier. So we're going to see a pickup in companies who are either paying off that debt or refinancing to kind of take advantage of these pretty good market conditions that we're in right now before the Fed picks up rates.
And do we have a good feel for which companies are carrying the most debt and could be the most affected by all of this?
Well, there are many. It's normal for corporate America to be borrowing some of these, borrowing to kind of finance their operations and what they're doing. A few that come to mind are AT&T. I believe that it has debt coming due this quarter. A lot of big names, looking at AMC, it's refinancing $5 billion in debt this quarter. So it'll be interesting to see the progress on some of these big names.
Indeed it will. Alexandra Semenova, good to see you.
Good to see you guys.